Today, Bitcoin rises as we close out the week, and Digital CEO Sam Tabar breaks down what we can expect in 2026 as it relates to the Ethereum network. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Let's get a quick check of prices as we kick off the new year. As of noon Eastern, major cryptocurrencies are on the rise, with Bitcoin, Ether, and XRP all moving higher. And for the week, Bitcoin and Ether are in the green as well. All right, focusing on Ether for our main story. I spoke with Digital CEO Sam Tabar about what we can expect in 2026 as it relates to the Ethereum network, ETH ETFs, and digital asset treasuries. Over the summer, Digital, a former Bitcoin miner, converted its entire treasury to Ether. In July, Digital sold its Bitcoin reserve and used proceeds from an equity raise to buy ETH, transitioning from Bitcoin mining to a pure play ETH staking and treasury strategy. Now that it has been more than 5 months, how would you assess that decision? Do you think that was the right move?
Well, we certainly think it was the right move from becoming a Bitcoin miner to becoming a capital markets proxy for Ethereum. Fortunately, what we also did was we avoided to become a pure play digital asset treasury. I don't think there's a bright future in that. What we've done instead is that we have a stack of Ethereum on our balance sheet, and we also own a massive controlling ownership of an artificial intelligence company that we recently IPO'd called White Fiber. For us, we think that the future is digital assets and artificial intelligence. And so we express that through holding Ethereum on our balance sheet. And for artificial intelligence, we own 71.5% of White Fiber, a recent IPO that focuses purely on infrastructure for AI applications.
So where does the company stand right now in terms of your ETH holdings, and what can people expect from Digital in the new year? What else can people expect?
Well, I think people are going to stop thinking, investors are already beginning to ask a different question. They're not asking, what do you hold and how much do you hold? But rather they're asking, how do you operate, what do you operate, and how does it scale? I think that shift is happening right now. And I think that's going to be a big theme for 2026. I don't think that DATs, digital asset treasuries, are really a pure play version of that is a viable investment vehicle. You need to have distinctions, and we've done that. We've structured ourselves in that distinction. We have, we just last week, and I don't think the capital markets realize this, but we have an $860 million contract that White Fiber has signed over a 10-year term. That kind of operational cash flow on the AI side that we own 71% of is an amazing moat and differentiation for a digital asset treasury company. And so we're really excited to be positioned that way. And I think in 2026, people are going to realize that not all DATs are the same.
So last time you and I spoke, you mentioned that ETFs offer passive exposure to the price of ETH. But a company like yours offers exposure plus yield due to staking. But now we're seeing applications in the US for staked Ether ETFs from asset managers like BlackRock. Do you think we will see these investment vehicles start trading in the US in the new year? And if so, what does that mean for Digital? What's the investment case to pour money into your company versus a staked Ether ETF?
I think that's a very good point. And it's one of the main reasons why we decided to avoid becoming just a pure play digital assets treasury company. Because if ETH ETFs are able to begin capturing yield, then why invest in a pure play DAT? Because that's going to be the same as an ETH ETF. So that's one of the main reasons why you need to have an operating company to distinguish yourselves not only from other digital asset treasuries, but also distinguish yourself from ETH ETFs that will have the ability to eventually capture yield. And that is a very, very powerful reason why you really need to have a successful operating company that you get cash flow beyond just putting ETH on your balance sheet.
So it sounds to me like you think that these staked ETH ETFs could potentially pop up here in the US in the new year.
Absolutely. I do think that's the trend, especially given the regulatory clarity around Ethereum, which is a good thing. The more regulatory clarity there is on Ethereum, the higher activity on chain occurs. And when there's higher activity on chain, you have the valuation of Ethereum go up. So, in many ways, we do welcome ETFs because I would love for them to grow because the more they grow, the more they buy Ethereum and the value of Ethereum goes up. So it is a win-win. There's going to be more competition from a capital markets perspective, but the valuation of Ethereum will continue to go up, especially with the regulatory clarity that's currently occurring.
You're obviously bullish on Ethereum, telling me back in July that Ethereum is where economic throughput is heading. You also mentioned tokenization, which is largely built on Ethereum. We're seeing major financial institutions rapidly increasing their involvement in asset tokenization in an effort to unlock efficiency and new revenue streams, with banks like JP Morgan and asset managers like BlackRock tokenizing everything from money market funds, deposits, and bonds. What are some of the main drivers of this trend, and do you expect the momentum to continue in the new year?
Yes, absolutely. Ethereum is a programmable economic infrastructure. It's the layer where tokenization happens. It's where smart contracts are executed, and it's where institutions are actually building production, very, very profitable financial systems at this point. And we're now finally getting away from speculation and building product. And you're going to see that within the financial institutional world. I'm very excited about that because the real hang up was the regulatory chaos that occurred under Gary Gensler. That gentleman is no longer. And we now have a very, very friendly regulatory regime for Ethereum, for digital assets. And finally, we'll see that valuation being unleashed when economic products are being built by financial institutions on Ethereum, which is the infrastructure base layer of digital assets. There is no other blockchain that competes with it.
Crypto asset manager Grayscale predicts 2026 will be the dawn of the institutional era for crypto. And speaking on CNBC Squawk Box this week, Reserve One CEO Jamie Leverton said she also expects more institutional adoption of crypto in the new year. Do you agree? What's your outlook for institutional adoption of crypto in 2026?
I think we're going to see a hockey stick growth towards it. The issue in the past was that the rules were not clear, and financial institutions they're not interested in getting into a space where the rules are not clear. That is no longer the case. So we will see finally, given the regulatory clarity that's occurred, I think in 2026 we'll be seeing Ethereum probably. My bet from a valuation standpoint by the end of the year will be about 10,000. And I'm being pretty conservative on that.
It certainly will be interesting to see if your forecast comes to fruition. But how do you think the Ethereum network compares to its competitor Solana, which has also been gaining traction in 2025, especially as we saw treasury companies tied to the Sol token, as well as spot Sol ETFs from issuers, including Bitwise and Grayscale, pop up here in the US?
Well, here's the thing. Ethereum has no downtime, zero downtime. Whereas you can't say that about any other blockchain. Other blockchains have downtime, have security issues. And I don't think a financial institution, any blue chip player is not going to use cutting edge technology that has the risk of downtime. And Ethereum offers zero downtime historically. And so I think Ethereum will continue to be the blockchain of choice. And also, most stable coins are built on Ethereum. They're not built on Solana or any other blockchain by a long shot. And I think one of the reasons for that is the fact that there is zero downtime on Ethereum. So I think Ethereum will continue to be king when it comes to programmable money. And I also think eventually one day it'll eat Bitcoin's lunch because Bitcoin is an incredible store of value, but it's not programmable.
Okay, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.